a HELOC versus a credit card, and what is better. So when it comes to borrowing money, it can feel like you're stuck between a rock and a hard place, or in this case, a HELOC and a credit card. That was awful. Now, both have their pros and cons, but which one is the best option for you? Well, let's dive into the nitty gritty of these two forms of borrowing and see which one comes out on top. Now, a HELOC, or a home equity line of credit, is a loan that uses your home as collateral. This type of loan is a great option for those of you who own a home and need to borrow a large sum of money for home improvement projects or pools or whatever the case may be for your situation. Now, with a HELOC, you can typically borrow up to 80% of your home's value and enjoy relatively low interest rates. On the other hand, a credit card is a type of loan that is based on your credit score. You can use a credit card for just about anything from buying a coffee to booking a flight. Interest rates, however, on credit cards can be higher than a HELOC, but they are also a lot more flexible. You can use a credit card anywhere that accepts it, and you can also use it for smaller purchases without having to go through the hassle of applying for a loan. So, which one is better to get? Well, it all depends on what you need the money for. If you're looking to make a big purchase, such as home renovation, a HELOC might be your best bet. But if you are just looking to make everyday purchases, a credit card is probably a better option. Now, another factor to consider is how you'll pay the money back. With a HELOC, you'll have a set repayment schedule, which can be helpful for those of us that want to stick to a budget. On the other hand, a credit card, you'll have more flexibility in how you pay the balance back. Just make sure to pay it off in full each month to avoid the amazing high interest rates that come with a credit card. Guys, finally, let's talk about interest rates. As mentioned earlier, interest rates on HELOCs tend to be on the lower side than credit cards. And lastly, guys, let's talk about the interest rates. Guys, as mentioned earlier, interest rates on HELOCs tend to be lower than credit cards. However, keep in mind that the interest rate you'll receive on a HELOC will depend on your credit score. So be sure to check your credit report before applying. Now, with a credit card, the interest rate will also depend on your credit score, but you can also shop around for a credit card with lower interest rate. In conclusion, my fellow watchers, both a HELOC and a credit card have their pros and cons, of course. So it's really up to you to decide which one is better for your needs. Now, just remember to weigh the options, compare interest rates, and think about how you will pay the money back before making a decision. And as always, never, ever borrow more money than you can afford. Thank you so much for tuning in to this week's episode. Guys, leave a comment below. Let me know your thoughts on this week's episode. We look forward to seeing you on the next one.